Labor markets, Jeff, remain very strong across the world, at or even better than pre-pandemic levels. And we just did a survey looking ahead into the third quarter, asking employers what their hiring intentions were. And the resounding response was continued employer optimism in a labor market that is very tight for finding people is a big challenge for many organizations.
And can I ask you about the Great Resignation, that phenomena that we think has started to dissipate, but saw a lot of people take early retirement, take themselves voluntarily out of the workforce, a lot of people who don't want to come back to work because of health concerns post-COVID. What is your understanding of what that whole phenomenon now means for continued tightness in labour markets, or perhaps a reversal as people do begin slowly to drift back into employment?
Well, we like to talk about the Great Reshuffle, because in actual fact, if you look back historically on economic cycles, whenever you have a strong economic cycle, a lot of demand for labour, wages going up, turnover amongst personnel increases, and people leave their jobs for better opportunities in other places. And we have a pandemic-induced anomaly in the labor market with the supply shocks that's really driving sky-high demand for labor. And to us, it's very normal at that point that you'll find 20 or 30% higher turnover of people leaving, because most people are leaving straight away into another job. And so as you look at that, we would expect that to start to subside somewhat as markets cool down a little bit, labor markets normalize a little bit following the pandemic. If you look at the participation rate in labor markets, in Europe, it's actually where it was pre-pandemic. In the US, you still have a little bit more than 1 million people that are outside of the labor market that used to be there, but they are mostly people who retired early, and we believe over time they will come back as well. So we would expect this to normalize over time.
When Jeff and I go up against European policymakers, they say, well, we're different over here. We have an exceptionalism compared with what's going on in the United States, when I refer them to the JOLTS data. And then I refer them back to the fact that IG Metall thinks its workers can get 8.2% this year. And then they come back to me and say it's an outlier. Just tell me what the European jobs market looks like, specifically with wage increases, because I think we've got that to come still, despite the fact that policymakers still keep telling me, oh, the raw material increases are abating, hence inflation isn't what you think it is.
Our estimate is that wage inflation, will stabilize pretty soon and start to come down. Well, it'll come down high. It'll still be higher than it was pre-pandemic. But if you're thinking about wage inflation in different parts of Europe, if it's at 6 or 7 or 5%, like in France, it should come down to a 2 or 3% level towards the end of the year, as you anniversary some of the rapid increases, and you're also starting to really, come up against a cooling labor market.
Cooling labor market, but a cost of living crisis. And again, that's been a subject of many of our conversations here in Davos as well. There is no doubt about it that if I'm a worker and I'm getting a 3% or a 4% pay rise as well, and yet my inflation rate and individual inflation rates are way above the headline 8-9% in many cases because of the preponderance of energy and food. So we're asking people to take lower salaries than before the pandemic?
Well, what we have to remember is that real wages increased very nicely up until the summer of last year.
So let me just confirm, and I'm going to keep interrupting you, but this is important. Real wages moved ahead very nicely up until the summer of last year. At the same time, we had negative 0.5 deposit rate at the ECB.
Right, so we had a real wage increase for a number of years. And then we had a rapid increase in inflation, in particular starting this year. So what workers are feeling right now is real incomes, so nominal wages going up, but real incomes going down, that will, they will remember this. But if the inflation starts to come down reasonably soon and they start to see a cooling, we think that workers' expectations will also be lower. But you're right, of course. If inflation, headline inflation, continues at its current pace and we are far into 2022, workers' expectations is that they also want to see their real wages recover some of the losses that they've had due to the inflationary environment.